Okay, good morning, 3E3. Okay, today we are going to start on the next chapter, which is cost of sale and other expenses. Okay, so if you have understood the previous chapter, chapter 6, okay, this chapter will be very easy for you because the logic is the same, it works the same way. Okay, just that chapter 6 was income, and then this chapter is expenses. Okay, so what are expenses? Expenses are costs incurred, okay, in the operation of a business, okay, to earn income in the same accounting period. Okay, so I have expenses. Okay, two kind of expenses. I have my cost of sale. Okay, what are cost of sale? Cost of sale are money that you need to spend, okay, in order to buy goods so that you can sell the goods. Okay, so cost of sale is the total cost price of the goods that have been sold. Okay, and I have my other expenses. Okay, my other expenses are all the other costs, okay, that you incur during the operation of a business to earn income. Okay, so things like wages, okay, electricity, utilities bill, insurance, all these are your other expenses. Okay, so according to matching theory, okay, the cost incurred to buy the inventory should be matched against the sales revenue earned, okay, from selling the inventory in the same period. Okay, so the sales revenue that you earn, okay, you must match with how much is the cost that you use, okay, to spend to buy those inventory, okay, so that you can know what is actually the true gross profit that you have earned for that period. Okay, you cannot like sell the goods now and then your cost of sale you calculate in the next accounting period, then it doesn't make sense, you cannot find the true gross profit. Okay, same thing. Okay, my expenses, okay, how much is the other costs, okay, incurred, okay, to run my business. Okay, so if this accounting period I've used this utilities already, okay, I need to charge it to the um same accounting period as the income earned, okay, so that I can find the true profit for that period. Okay, so what's the double entry for my sale of goods? Okay, my cost of sales, okay, I debit. Okay, this is our usual double entry. Debit cost of sales, credit inventory. Okay, so this topic I'm actually focusing on the expense, so I'm focusing on the cost of sale. Okay, remember previously I've talked about this account. Okay, so if I have an account cost of sale, okay, debit credit balance, okay, let's say now is 2018. Okay, I have November 1st balance brought down, okay, $5,000 debit. Okay, cost of sale is an expense, is a debit. Okay, I have a balance brought down. So this means, okay, so far all the cost of sales, okay, from the beginning of the accounting period until now, okay, I've spent $5,000. Okay, so now let's say this month, okay, I also have, okay, November 30th, okay, debit inventory, let's say 2,000. Okay, now I have 7,000 debit. Okay, then December 1st I will have a balance brought down again of 7,000 debit. Okay, so every month, okay, when you have cost of sale, you just bring it down, bring it down. Okay, but at the end of the year, so now, okay, December 15, okay, I have again a inventory. Okay, I buy goods, okay, and it's $3,000. Now I got $10,000. Okay, at the end of the accounting period, okay, which is December 31st, I need to close this into my income summary. Okay, last chapter we have already learned about income summary. So income summary is the total amount of the expenses or income you have to close at the end of the financial period. So let's say our financial period is 31st December. So I want to close all these $10,000. Okay, so this is a debit account. If I close, I need to credit this. So this will be a 0. Okay, I will let it go into income summary. So what is the closing entry at the end of the year? Okay, this is my closing entry. So how do I do this double entry? Okay, I will debit my income summary, credit my cost of sale. Okay, so this is how I close my cost of sale at the end of the year. Okay, so cost of sale is a expense, so debit. So debit now becomes credit. Okay, then you close into your income summary. Okay, it works the same for other expenses. If I have other expenses and you have made a payment every year, okay, so debit other expenses, credit either cash at bank or cash in hand. Okay, so how do I close at the end of the year? Same thing, debit my income summary, credit my other expenses. Okay, so it works the same way. Okay, if this is other expenses, you just write all your expense, then you also every month your balance brought down. Okay, but at the end of the year, you got to close the total amount into your income summary. That's why debit income summary, credit other expenses. Okay, so now let's go to an example. Okay, today we are going to learn two different kind of expenses. Okay, so first kind would be my expense payable. Payable means I'm supposed to pay. I've not paid yet. Okay, I've not paid yet, but I've already used the expenses. So if I've used but not paid, okay, to me it is a liability. Okay, I owe people money. Okay, so if it's a liability, this is a credit. Okay, so according to the accrual basis of accounting, okay, I've used it already. I need to recognize it in the period that I've used it. Okay, doesn't matter I've paid for it or not, because I've already used it. I need to recognize it. Okay, so let's look at example 1. Okay, for the year ended 31st December 2018, Jeff paid, okay, 30,000 for wages. Once you see the word paid, okay, I know this goes into my cash at bank because I've already paid. Okay, and still owed 1050. I owe this amount of money. I've used the wages. That means I've used the workers. The workers have already worked for me, but I've not paid them. Okay, so they are actually my wages expense payable. I need to pay them. I've not paid them. To me now it's a liability. Okay, prepare the journal entries to account for wages for the year ended 31st December 2018. Okay, including the closing entry. Okay, so let's open your journal entries. Okay, please write together. Okay, at the same time as me. Okay, now I'm doing the notes. You also write your notes. Okay, so we'll do one entry at per each time. Okay, so let's go through the example again. Jeff paid cash at bank. You paid for wages. What's the double entry? I pay, so cash at bank goes down. Credit my cash at bank, debit my wages, which is an expense. Okay, on the last day. So 2018, December 31st, debit wages expense, credit cash at bank. How much is it? 30,000. This is the amount that you have paid. But at the end of the year, you still owe 1050. 1050 you owe is a liability. So if it is at the end of the year, this is your ending entry. Okay, ending entry, I just put accordingly. So if this is a credit, I'm going to credit my wages expense payable. Then I debit, okay, the wages expense. Debit wages expense, credit my wages expense payable. 1050, 1050. Okay, so I've already paid this amount. At the end of the year, I still know that I owe people this amount. So how much is the total expense you spend for the whole year? Okay, it will be the total of these two amounts, right? Okay, so your income summary for the whole year, how much is your expense incurred? Okay, debit my income summary, credit your wages expense. 31050, 31050. Okay, remember I've taught you all the trick. If you are not sure, okay, how to put in the number, how much is the number, okay, so go and circle all your wages expense. Go and circle all your wages expense. Okay, debit side, I got 30,000 and 1050. Credit side, I got nothing. Okay, so it must balance. Okay, my wages expense must balance. So I put wages expense here. Okay, how much is the amount? Now I put 31050, it will balance. Okay, I'm closing the total amount into my income summary. If this one balance already, you are correct already. Clear? Okay, then if you're okay, we are going on to the second example. Now, second example is a continuation of the first example. In the first example, at the end of the year, you have a wages expense payable. So you actually open an account, okay, called wages expense to remind yourself, okay, payable, okay, it's a credit account, to remind yourself that, oh, this amount I have not paid. Okay, so if this amount you have not paid, next year, do you need to pay it? Yes, you need to pay it, okay? So this ending entry of the previous year has now become the opening entry of the next year. Okay, so the opening entry of the next year on 1st January, you have a balance wages expense payable. Okay, 1050. Okay, this was from last year. If this is a payable, this is a credit. This is my beginning entry. What do you have to do to your beginning entry? Okay, same as your income chapter, you need to flip. You need to flip it out because you need to now pay for this amount. Okay. Okay, so let's open the journal entries. Okay, repeat again. Okay, now I'm doing example 2. Okay, on 1st January, I have this amount. This is my beginning entry. Beginning entry, I need to flip. Okay, I need to reverse. Okay, so wages expense payable is a credit. If I reverse, now this becomes a debit. Okay, on the first day, so 2019, January 1st, I debit my wages expense payable. I credit my wages expense. Okay, the amount is 1050, 1050. Okay, during the year, the following transaction took place. 12600 was paid. I see the word paid. I know I've paid money already. I pay by cash, okay, on 15 July. Okay, so if I've paid, okay, my double entry would be debit wages expense, credit cash in hand. I've paid 12600, 12600. Okay, then they say the annual wages amount to 15500. Okay, annual wages means the total amount that I've used this year. The total amount that I've used this year, okay, where should it go to? I only got 4 entries. I got beginning, I got cash at bank or cash in hand. Okay, I got ending, and I got my income summary. So when I talk about annual wages, okay, total amount incurred, so which one should it go to? Okay, it will go into my income summary. Okay, so I've already mentioned before, you need to leave income summary should always come at the end. Okay, so you leave these two for your ending balance, then I'll do my income summary here. Okay, so income summary will be at the end of the year, December 31st. Debit my income summary. This is the total amount of expense that I've incurred. Okay, debit my income summary, credit my wages expense. Okay, 15500. Okay, so now what's my ending balance? Okay, you ask yourself, okay, initially I owe people this amount. Okay, I owe people this amount. Now I've paid this amount. Okay, so I will have to pay off the previous amount, right? 12600. Okay, pay off 1050. But I know this whole year I've incurred 15500. Okay, so how much have you not paid? You have not paid 3950. Okay, if you have not paid, what is that called? Okay, that's called your expense payable again. Okay, expense payable is your current liability. Current liability should go on the credit side. So I will credit my wages expense payable, debit my wages expense. Another way you can do it, okay, is the trick that I've taught you all. Okay, just go and circle all your wages expense. Okay, look, which side is short of money? Credit, I got this amount. Debit, I got this amount. Okay, the more minus the less, okay, I'm short of 3950. 3950. Okay, which side are you short of? This side. So this must be my wages expense. Okay, so how much have you not paid? Okay, it's a liability, so it must be a payable. Okay, wages expense payable. Okay, okay, so if you're okay with this, okay, then you're supposed to do the extract of financial performance and the statement of financial position. Okay, so same thing as your income. Statement of financial performance. Okay, GIF. Okay, statement of financial performance. Okay, for the year ended 31st December 2019 extract. Okay, performance, okay, always take my income summary, okay, as mentioned in the previous chapter. Okay, so I will put less expenses. Okay, your income summary amount is 15500. Okay, then your statement of financial position. As at, position is as at 31st December 2019 extract. Okay, this will be your ending balance. It's always your ending balance. So your ending balance, you're still owing people 3950. Okay, you are owing, so it's a current liability. Okay, current liability. Okay, so wages expense payable 3950. Okay, So in conclusion, okay, what is the adjustment we have to make at the end of the year? At the end of the year, if it's a payable, this is a current liability, so I need to credit my expense payable, okay, debit, okay, your expenses, okay, whatever the expense name is, okay. But at the start of the next year, okay, it is a reversal, okay, so opposite, debit my expense payable, credit my expense. Okay, so what if you did not do this adjustment? Okay, you are supposed to pay but you have not paid, it's not adjusted, then your expense will be too little. Too little is understated. Okay, if your expense is understated, then your profit will be too much, overstated. Then what is the effect on current liability? You did not do this, your current liability, you did never state the current liability, it will be understated. If it has been correctly adjusted, then this will increase, this will decrease, this will increase accordingly. Okay, so this is the whole thing on expense payable. Okay, so if you're okay with this, okay, for today's lesson you just need to understand this. Okay, okay, that's all. Okay, read through the notes if you don't understand. Any question, please ask. Okay, I will not give you any homework question yet. I will only give you after I've gone through the next portion of this topic. Okay, that's all. Bye.